Well, to give us analysis on all of this, Chris Weston, IG Chief Market Strategist, joining us from Melbourne right now. Chris, great to see you. Just explain what you think was going on in the US overnight. Was it about the Fed and the fact rates might go higher earlier than planned, or was it geopolitical concerns?
I think actually, to be honest, Bridie, it's both of those situations. I mean, we know Richard Fisher came out after market. I heard you just saying that. I saw the comments flash up on the wires this morning. They're not going to shock anyone. I mean, he's already spoken a week ago or so and have made his points very clear. Charles Ploss has been speaking as well. And you've obviously seen Jeffrey Lacker as well. So if you look at the hawkish to dovish scale on the FOMC, they're about as hawkish as you get. So they've had every opportunity to express their view, and that the hawks have said what they needed to say. Well, they've needed to say, and of course the dollar's reacted. We saw a little bit of a sell-off in the front end, but what I think ultimately now is we have got a situation where there is a more robust debate about when the Fed are going to look to move, and certainly the market has reacted a little bit, and I think probably consensus now would be the June meeting next year, when there's a press conference, could be a feasible date when they announce that they're going to lift short-term interest rates. But what of course that does is it leaves the market a little bit more exposed. Now, we've been talking time and time again about how solid the market has been, and how robust it's been against all these geopolitical issues, and of course that's because they've got the lower for longer trade, the quantitative easing still in the market, and people have just said, there's still a lot of liquidity, the Fed will be behind the market, the ECB, the Bank of Japan, all these different central banks will be behind the market. So time and time again we've shrugged off geopolitical concerns. As soon as the Ukraine tension headlines came out, and I think it was really stemmed from the Polish finance minister last night, who talked about the Russian troops being battle ready and 20,000 troops amassing along the Ukraine border. We did see a really good buying opportunity in the long end of the curve in US 10s. We saw them down about 6 or 7 basis points. There wasn't obviously an initial sell-off because of the really strong ISM service numbers that we saw in the US. I mean, they were the new orders component about the highest since August 2005. But if you look at the about turn that we saw in the Treasury market, if you look at the about turn in the stock market as well, it was pretty clear that the Ukraine tensions hit sentiment fairly hard. And I think that the fact is that the market is now feeling more vulnerable because of the debate around lift up on short-term rates, and now geopolitical issues do matter a little bit more than they did, say, a couple of months ago.
So for our market, we were down yesterday anyway after the China services data was so weak. It's going to be a pretty weak open this morning.
Yeah, that's right. I mean, whether or not we see people looking to step in and buy after the unwind of the auction is going to be interesting. We know that there's been a really interesting debate about how banks fare from here, and of course the debate or the talk after the rates decision yesterday was just how cheap refinancing your house is at the moment, and obviously that's going to spur on credit in the short term potentially. 5-year fixed rates now 4.94% at some banks. That's very interesting indeed, and I think perhaps the banks, that yield trade still re-emphasised by the fact that the RBA have got this lower for longer mantra playing into their market. But if you look at energy stocks, they're likely to get hit pretty hard. WTI Brent prices coming under a little bit of pressure last night. The energy sector on the S&P down over 2%, so that was the worst sector. That's likely to be reiterated in our market as well. There's not really much on the corporate side. I mean, there's a couple of stories which I saw this morning, but from the earnings side of things, certainly that really ramps up tomorrow. News Corp, Tabcorp, Rio coming out with numbers, so there'll be some pre-positioning ahead of that, some rollovers from yesterday's numbers as well. So look, a pretty flat, pretty negative open. We're down about 0.4% today.
Just want to ask you too a bit more about the moves in the greenback and the Aussie dollar. I mean, it was pretty resilient, even though we saw that greenback strengthen on that data you were mentioning there. Why the resilience?
Well, I mean, there's something we could talk about for half an hour, to be honest, Bridie. It's one of the things that has plagued markets, but the RBA still have a very neutral market, and when we're playing central bank divergence, that the central bank, the RBA, still have this neutral capacity. If you want to sell a currency against the greenback, you're looking at other currencies, the euro, and perhaps also the sterling as well, and that's probably more premised on the fact that there's a lot being priced into the rate structure in the UK at the moment, and of course we've got the Scottish election, which has downside risk. So look, I actually quite like downside from the Aussie dollar at current levels, and I'd be looking to sell around current levels at the moment. But I think the RBA have given us a very clear signal when they're going to look to hike or move on rates, and they've already told us that they'd drop that period of stability in rates, that line, and then that would give us a code word that potentially rates are going up further down the line. And yeah, Glenn Stevens spoke about that on July 3rd. So yeah, for me, I think it probably goes down a little bit from here, down towards the sort of 200-day moving average around that 91.90 level. But yeah, there's easier currencies to sell against the greenback right now.
What are some of those, do you think?
Yeah, as I say, I think euros, there's still vulnerabilities around that. I think we're going to see a massive expansion of the ECB's balance sheet over the next 12 months. That's going to keep it low. I think if I was going to be long the dollar, it'd be long dollar against the yen. And also, for me, I think the other really good one to do here, Bridie, is against the Canadian dollar. I think this goes up, past the 110 level up to 112 over the probably next couple of months. So, yeah, probably out of all of those, I like dollar CAD. I think that's probably a really good place to be right now.
Chris, really appreciate that as always. Thanks so much.
Thanks, Bridie.
Let's have a look at some of the stocks we're going to be watching at the start.